days. Mess with fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on into the live today. Let's check it out. BTC to the upside. We called that pump up here on the hourly time frame earlier this morning during the Asian session, and boy, did it pump. It went up beyond our expectations to the 27K region. And we also started to get a nuke as it appeared to fatigue out just there a moment ago. Let's go ahead and move into the liquidity and see where we ate into. We took 11 billion off the table at 26.6, 22 billion off the table at 26.7, 26.8 we had table, and 12 billion, 26.9, and 27K even, 12 billion off the table. Could we keep going? There's still more up here on the monthly time frame. We're just going to the pertinent time frames here. We're not going to do you the full service. We did that earlier today. My stream is poor. My daughter was using the iPad. I hope she doesn't continue after I told her to stop. How y'all doing today? I hope you guys caught yourselves some nice trades. The 1 minute time frame doesn't really have much to offer other than to show it caught the caked liquidity down here as we zoom in. So while we wait for that to load, we do have 180 million caked up in this region down at 26.9 and 26. Then it's a little bit sparse. Overall, it's not as caked as it was up here. So we could see a continuation idea as we saw on these time frames. There's on the 3-month time frame that amount changes to 39 billion at 27.2 and 43 billion at 20, and then it starts to taper, and by taper I mean 26 billion off the table at 26.7 on the 3-month time frame. This is where we start to enter into external liquidity, folks. We went over this morning about internal versus external liquidity. Internal liquidity is within the range you're trading. External is longer time frame pools. We went over where that would be located. So where can we expect a pullback? That's what everyone's wondering. Where can they offload their positions and go to the other side of the trade? Well, this is the yearly time frame. It's one of my favorites because it shows the traps that are induced, the double bottom fake outs that come grab all the liquidity, and then the bearish breakdown ideas which come up and grab the bear's liquidity. So we previously saw the fake out during the FUD of the Silicon Valley Bank collapse, and it went up and grabbed that $198 billion at 25.6 and knocked all the way up to 26.4, 104 billion off the table. So it took about 300 billion off the table with that surge up there, and then it retraced a little bit, chilled out till Thursday, and now we're on our way back up. It hasn't updated just yet. It will update on the daily candle close, but we have seen it now go up to this region. We knocked the 143 billion off the table, and that we're aiming to get that 27.2 region of 102 billion. Did we reach that 27.2 amount? Let's go to let's go to the charts and see. So we currently went up to 27 even. Seems a little bit too convenient for me for that to be a top, just me personally. So the interesting idea was, if we go to a lower time frame here of that we laid out for the liquidity pools, you saw how the absorption of it came into fruition, as in it went up to those levels and stalled out for a bit. It went up to here, stalled out for a bit, so you could have taken scalpels, the trend-based fib levels over here. So let's see which levels we're at currently on all of the fibs that we've drawn over the past few days. So this is the higher time frame fib level from the external liquidity range, from the top of the impulse to the downside here, from June, basically from June 9th to June 16th, that dropped to the downside. And this fib level here, we are resting between the 0.65, 0.6, we're just above the 0.66 region. Will we go up to the 706 region and reject 9? Let me close out of this because it does take some effort on my PC, 27.309. So we do have that 100 billion that could be knocked out at 27.2, and then on lower time frames, I believe we had like 40 billion or something at 27.3. I got new mic, everyone. Please let me know how the sound quality sounds. Is it all right? Is it not loud enough? Do I need to crank the gains up? Yeah, so we didn't tap out that liquidity just yet. So if we go here, we still have that 40 billion on this lower time frame of liquidity at 27.2, and then we have 43 billion at 27.4, And so I would expect something at least up to that 27 confirm support and retrace into this gap that it created down here. I'd be waiting for double tap confirmations and for the nuke to lock in on higher time frames. What do I mean by nuke? Well, let's start turning on the indicators, shall we? So the previous nuke we had was up here at the local top, which happened to be a 618 rejection, and it did play out after locking in on the hourly time frame for 8%. So if we did see a nuke start to appear, which locked in on a 5-minute time frame and gave you about 2% if you scalp that. Although you'd have to be in a high risk idea to do that. Let's see where that was. It disappeared now. I'm not sure what causes it to disappear. It should have locked in on one time frame. We did post that in the Discord here as per. Let's just go over here to the Momentum Master Discord. We were talking about the nuke locking in 174%, and you did see it appear up here before it reversed. So I would wait for it to solidify on a higher time frame. You are starting to see a shoulder, head and shoulder potentially come into fruition here. We are getting the cloud to thin. What does it mean by thin? Well, you're starting to see this trend cloud start to get thinner, as in the volume starting to recede from being buying volume into selling volume. It starts to shift in color like it did here when it was starting to thin and started to see the surge up. Now, when you're above the cloud and it starts to thin, you could see an expansion to the upside. If you're starting to see it thin, it's a potential continuation or expansion idea. So what is this indicator we're using? It's Momentum Master. You can go to momentummaster.info, toggle these indicators and see what they mean in more detail. You could look at individual components like the trend cloud itself and see what it means. Check it out in your leisure. So we're going to see if this head and shoulders idea is going to play out here. Looks like we got some bearish divergence on the 5-minute. So the people that did take the 27K idea would be up on the scalp idea nicely in profit from that alert you received to your phone. I would be always moving your stop loss into profit and lock in your gains as you go. You did bullishly reset the hourly here. What do I mean by that? We went over that the last 2 days. You have this horizontal price action while this is going down. But you have the Williams wanting to come down on. Let's look once again at the 1-minute time frame and where sound is great. Thank you. So, I mean, I just see this hop, skip, and a jump here. Although they have gone to that region only to turn around, but they caked this up nicely. It was at 40, and they caked up a 3 billion more from this retrace. So they retrace back in to make it more juicy so they can come back up to that region. And there's just simply nothing down here on these time frames. I mean, there's 10, 15 billion here and there, but overall, it's just right there to take this. But we can't always, we have to remain unbiased in terms of buying into the euphoria. You have to always keep a level head and not see 30K or as an instant thing. That was amazing. So what were we seeing previously when we had that cloud idea? So we're going to go to the hourly time frame and take a look. The hourly and the 15 was what sold it for me. So we had this volume tapering beneath the price action. This was a very unambiguous, easy scalp that I had confidence right off the bat on, and boom, it went up to that region exactly. and you see the cloud coming up. Cloud is still healthy. You'd only start to expect some sort of reversal as it starts to taper like this. So until it starts to curve slightly, you could still see this continuing higher, although you are at the outskirts of the Keltner channel, better known as the so the K-hole. You come back to kiss it if you're going to get refueled off of it, similar to what we did here. So you would come back to here and then bounce off of it on the outskirts of this. This is an ATR based Bollinger Band type thing. More accurate than Bollinger Bands though. Everything we use is leading and more accurate and back tested to a T. So you are seeing the baselines get above price here. So unless we can get above these baselines, this rally, we are about to see the markets open here. I heard something about Silicon Valley Bank did file for bankruptcy. So we are starting to see the vestiges of the old legacy banking starting to fail. So let's look at the S&P futures and see where it's leading us. So the S&P futures is seeing a similar type idea in that it did drop here and we're starting to see it buy back off the cloud and the adaptive and the weighted moving average. So we could see the continuation of an hourly play to the upside here. The actual S&P hasn't opened yet, so the gap is going to be wherever this thing decides to finalize. So it could be a gap to the downside only to recover the gap, but it might go down to. Let's look at the dollar, see what's happening with that. Did it lose that bullish level? Most likely, if they're bailing out banks, that might be the case. We initially saw that rocket surge up. The rocket played out here from Tuesday, and then we got a rejection at the 706 level, and we've been chilling out here. So the 15-minute play could come up here for another rejection. On the hourly is also overbought, so you could get rejected at any one of these lines here for a continuation down, although the 4-hour is in your favor. What do I mean by that? It is momentum is most likely turned upwards, although it's coming down right here. The Williams could come down more. The MACD is crossed to the downside more. So you could see an attempt to push up, get rejected on the adaptive moving average, and then come down to here and potentially break new lows based off of the momentum of this. Let's turn on the multiple time frame stochastic RSI and see how the interplay of the daily is going with the hourly here. In your essence with me in this eternal moment of which we all share an inextricable and inexorable part. As you see here on the fuchsia and the purple wave, fuchsia and teal rather, fuchsia and teal, aqua. Fuchsia and aqua is heading up here, which means the daily time frame is curving up to try to catch the 4-hour, and the lower time frame, which is the hourly, is starting to play out a little bit to the upside. So these two are trying to catch the 4-hour here. So you're starting to see this potentiality if this tries to play out on the hourly 15-minute play to the upside, as we were talking about coming up before it comes down, only to see a rejection at the 50 region or something. So that's how you use those time frames to see the interactions between the probabilities of the different time frames. So we could go to the hourly time frame and see how they interact with the 4-hour. It's going to look different because the vantage point you're looking is different, which is the 4-hour is now the higher time frame. So the higher time frame in fuchsia and aqua is here, which is the 4-hour trying to come down, and the hourly and the 30 is trying its damnedest to curve it, as we expressed before. But they're already reaching the overbought status, so they're at the end of their rope. So that could curve only slightly to see that go up. If we go to the 15, we'll see what the 30 is doing in conjunction with the 5. So So you have the 15-minute resetting, which is the current time frame, but you have the Williams wanting to dump on you. You have the 30-minute, which could double top based off this coming up if the 5-minute staves off this 15-minute resetting in a negative way. But this is all for the dollar, so we don't necessarily want to root for that because that would mean a retrace for Bitcoin, but it doesn't really matter. All we want to catch is the momentum. We don't care which direction it goes. So once again, it could come up to one of these regions before coming back to the downside based off the momentum. Let's look at the 6 and the 12-hour time frame. Time is precious, folks, so I'm trying my best to go as fast as possible. You can replay this if you need to later. So yeah, you're getting these things above you, the adaptive not in your favor here. The 6-hour is starting to come down. We can turn off the higher time frame, stochastic and stuff now. Okay, so 12-hour. Booyah. Yeah, everything's kind of below it on the 12-hour as well. So they try to come back up above and possibly fail, break down with the idea of the bank. So we were talking about how these were, if they paused at them at all. So you got some pause up at this one and got a bullish order block back up to it. And you've been seeing this rejection at the adaptive moving average on the 1-hour time frame for the S&P. I think we can remove this bearish projection for now. Yeah, we kind of came out of it. So we're going to start using the fibs over here if we go to the retrace. So if it came back to kiss the cloud at some power or overbought, then and the 15 and the 5 are all overbought as well. So you should be seeing some sort of overbought status that is looking to retrace. You're also getting a rejection at the cloud here, which is still thick. Let me remove these. Actually, we can still leave that up. Please talk about the Momentum Master Optima. That's, yeah, we can do that. It's not really publicly available yet because I don't really know how to factor it, but yeah, we can talk about that. So this is the adaptive on the 1-hour, and it also coincides with the cloud of the 6-hour, so we could be seeing a retrace here. We opened with the gap down, so we gapped down and we could see the retrace and reset of the 15 and the hourly here. So as the hourly of the dollar tries to play out, so we could see some sort of retrace. How far down are we going? I have no idea, but ideally you would want to see it come back into this region on a healthy long, because you had a break of structure here and a change of character, so you're trying to see where you would retrace into this region. Now if we turn this to a, come on bro, sometimes my right click doesn't work, it's like too laggy. My stream bitrate is not high enough. I might have to upgrade the internet at some point. So we could be coming back into some of this region, this little bit of happiness here. Where are we coming back to it? There we go. Basic. So you could see any of these bounces at any of these fib levels. Ideally, a healthy retrace is at the 618. With the idea of banks foreclosing, that could be seeing that play out. Let's switch to Heikin Ashi to see if those candles coincide with the crossover event. yeah, you do have a non-rejection wick here, so you could see this start to come up a little bit. What would that mean for the S&P? For the time being, we'll leave that there. We'll come back in a moment. Let's go to Bitcoin again. Happen to be the higher time frame 6566 levels of the larger retrace level of the external liquidity range. Analyzed version of that external liquidity would be here. So you'd expect it to retrace up to here or to go up to here and then start to chill out and then kind of flag out or do something. And that might be your kind of local top for the time being at 27.3. Once again, I know nothing. Light in the absence of eyes illuminates nothing. Visible forms are not inherent in the world. They're granted through the act of seeing. It's all about what you see in the charts and following through. We all love the future may entail. Your brain never sleeps and we all benefit from it. Yeah, off the charts in not necessarily the best way, but all right, so the Optima, let's go over that a little bit. So the Optima is a editable time frame. You can select, I'm putting sub 1 minute because I have that available to me. So I've been trying to see if sub 1 minute time frames averaged out can show divergences on the money flow, and it looks like it front run that one. So it had the hidden bullish divergence on the sub time frame average, which played out. So more often, and it only keeps a limited amount of data because it's looking at seconds data. So this is as far back as it goes on that time frame. So you only can watch it and back test it in real time. So I can't go back here, for example, and test it. And there was times in the Discord where I caught continuation ideas off of that sub 1 minute hidden divergence. So that's just one I keep down here to try to see that it front runs it. So you had the hidden bullish divergence on the money flow here too. So we had hidden bullish here on the regular time frame, but it was a little bit later, you see. So you had it up here, whereas this one was here down at this region. So it would have gotten you know, like a % extra in early. But it's not always the case. Sometimes it causes a liquidity grab to occur as well. So it doesn't necessarily mean it's better. But I've noticed it kind of front runs stalling out positions and continuation ideas. So yeah, it's editable. So if you want to look at higher time frames, you can switch this to like, you know, like an hourly, the average of the hourly and stuff like that. And that's kind of what another formula that I've added into here, which is the cumulative time frame volume delta with these arrows above the price. It's factoring all the volume disparity over all of these time frames. So you're seeing sell-off here, and even though there's a large sell-off, we just continued higher, so it knocked out all of the sellers here, and then everyone started to FOMO buy here. So once again, you had people increase here, so there was buying back. People sold off as you went up here, and then we ate them up, absorbed them, and then just kept buying more. And so we've been just seeing more buying than selling, although when we got to this region, they started to sell more, but then more people bought, sold, bought, sold, bought. And we're starting to see more selling up in this region, but we could see it's not intense. So the intensity will determine the length of the candle, or sorry, not the candle, the arrow. So the larger the arrow, the more intense of the disparity. And that would be what you have on Momentum Master A's, sorry, not A's, Momentum Master Ultimates. Consider money flow. You can turn that on and off. So yeah, seeing the 15-minute hold this baseline, if it can hold this baseline, we can still see that extra push to the upside we were talking about. It all depends on if we can hold this trend-based fib level. We broke through the trend-based fib level, and if we hold that, then we could see another push to the upside. Are we going to reject at the 706 of the external liquidity range, or are we going to continue higher to this idea? And this green block that we have here, let's just turn off everything. So this green block is the bullish trend-based fib level. So if we see a continuation in the long run, we could go up to here, but we'd have to induce more liquidity at that point. So I would expect like some flagging out before they go, if the bull run is meant to continue. So once again, we should see a chill out based off of these external liquidity ranges. But this 786 region here at 26,557 is pivotal for this the bullish projection to continue. If it holds that 26,556, 557 level, which is currently beneath but attempting to reclaim, so it's trying to induce an easy head and shoulders. Is this actually a head and shoulders, or is this like one of those bull flag trap ideas to get the early shorters to be wrong? Let's go turn on the liquidation levels and see, shall we? What is this free indicator that I'm putting on here? This is liquidation levels by ML Applications version 2. You can type this into indicators and put it up. It shows your 100x, 50x, 25x positions on both sides, and you can choose show statistics for the amount, and you can put the threshold. I put it at 0.1 to show every 100k trade. You could put it beneath that, but it might your cash and the visibility you can see. So right now we're swatting off some of the 100x that were entering down here. So it knocked out a bunch of 100x. There's still one more guy at 397. He just closed it. So as of this moment, you're seeing less. You're not seeing so many shorts enter up here just yet. Yeah, you could be seeing a retrace into this region at some point, but they're gonna make you pay for it first, extended M style. Like I said, I want to see a nuke close on an hourly time frame. I'm gonna be excited. All right, so we previously got up to that region. We didn't really get up to 27 even on this chart, but yeah, we're seeing some buyback wicks here, and that's just knocking off the 100x and then using their sell side liquidity to employ a position to the upside from a larger player, so they're absorbing it. So that's the absorption of longs. So let's go to the 1 minute time. So both sides are equidistant at this point we are at currently. If I just go off this immediate range here, you have more a larger look back here at this region. As you see by the right side, there's more lines here, and the length of the lines accumulates to more than the length of these lines combined. So even if you don't know the amounts or the size of the bubbles over to the left here, you can kind of add up all the lengths of the lines and pool them together like a game of pickup sticks and see that this has more than this, right? So this side has more than this. Immediately we're coming up to the 61 million guy here. So this $61 million guy is about to get knocked out of the game at 25.59. So he shorted into profit, and then they just used his guys to come back to his entry. And I think they just gobbled him up. So this is extreme minutia. As you see on the larger time frame, we're extremely imbalanced to longs at this point, and they just gobbled him up and then reversed off of his liquidity. So if you go down here, they knocked him out, and then they wicked up, and then they came back down. Immediately set the stop into profit. And this guy entered his short here and is currently at break even. So this $136 million guy is currently at break even. So if they go above that level again, they could be targeting this guy, these two guys that opened at their short down here at 26.5. So we're currently at 26,488. So they're currently in profit, but if it goes back above 26.5, it could be aiming at them. Let's go back to the dollar real quick. So now you can turn on the indicators. So once again, you don't need the indicators on all the time. It's not going to give you the automatic idea. You have to kind of work for it. Nothing is free in life, although it does lay it out in a nice way, I do think, if I do say so myself. But you got that crossover event. You could be seeing the dollar come up here, which would mean a retrace for the stocks, but Bitcoin might just say screw it and keep going because they're aiming at that liquidity. But it could go up to this gap before it comes down to here, you see? We already worked out where that gap was a long time ago, and it's still... So you're getting massive amounts of volume here. What are these colorations of these volume candles? These are PVSRA strategy candles. It is 200% of the previous 10 candles of volume. So you're getting massive volume exiting and leaving here based off of likely the news of Silicon Valley Bank, which is kind of bearish for the legacy markets, which is seeing this go down. You're seeing the cloud kind of get thin here and curve. So you could bearishly retest this and continue further to the downside. As we wick off of the 618. Once again, shout out to Jason Casper and the 618. You get that rejection off of that and then bounce off of that. That would be your ideal kind of place for a bounce off of the consolidation region as well. It would recover a lot of these. Is it just me, or is the stream a little laggy at times? Yes, that is my internet connection. I bought a condominium, and it shares the internet with the entire complex, and it's kind of antiquated and there's no way to upgrade it. So I use my own private one, but even that kind of has a limitation. The Air version wireless Wi-Fi style has so fast. Everything else is state of the art. The computer is a Mac Studio M1 Ultra, so it's not my computer, that's for sure. So we are seeing this idea of there's no cloud on the dollar because there's no volume available in the data here. So you just have to go off of the fact that the weighted moving average and the adaptive are holding nicely in this bouncing off of this. So you could see this play out on the 15-minute. Where is it coming up to? We could take this to the 706 region. We could go up to the 886 perhaps, and then come down. Let's go to a higher time frame and see if there's any other points of interest to look at. Yeah, sorry about that. I wish there was a way to increase it, or I would do that. So let's see, did we bounce off something here? We bounced off the 706 region. So if we go to the pocket here, we bounced off the 706. If it will update. Yeah, there we go. So we bounced off the 706 level, and then we came up And then are we going to an internal rage 886 or something before we come back down? I have no idea. Okay, let's go back to BTC. We're gonna go till the hourly candle close as we do, and then we'll leave you to it. Just trying to give you a little vision of how these are seen in the charts using the Momentum Master indicator, link in the description. Toggle through all these things at your leisure, read about how it came about, and yeah, check it out. So we're struggling to maintain this fat boy baseline here. If we start to break down out of this or close the candle beneath this, you could see kind of dropping down into this region. We did bounce off the Keltner channel here, so we could close out stronger and see the 15-minute play out here. It all depends on how much liquidity has been induced on what side of the trade. Who have been duped to believe what? You got the baselines, you got the crossover on the 15-minute, and the 15-minute has come down and been suppressed to some way, and the Williams has come down, and you did have this front run bearish divergence that would have given you that right there. We were talking about that divergence idea. So we're getting that cloud kiss. As we do, we come out, you kiss the cloud, you continue to get more power up there on the cloud. And then we go to the 5-minute. Starting to see that waning the first time since the surge up. We did actually see it start to thin here, but it never turned purple. Now it's starting to turn purple, the ATR range of the 5, so this is starting to show the possibility of this being true. So what you'd want to do is wait till the neckline retest. If you really believe that the short for the head and shoulders is playing out, you'd wait for it to come back to retest that and come down of the neckline for this head and shoulder idea. Otherwise, if you enter here, it could just come right up out of into your face. So you wait for that failure at the retest zone. Means this, then this will shift back to being blue again. This is a back testable ATR level, which is also editable. Peyton and a few others in the Discord have found their own style for the lower time frame. They've switched it up. Everything is customizable in here. You can also use order block finder. The order block finder is quite nice for finding order blocks. So if you go to, you'll find it on the higher time frame. You'll find it on the higher time frame. You can specify which time frame you want to find it in. If you go to the 4-hour, for example, eight minutes for hourly candle close. Yeah, and in that nuke that appeared, you had been up and still been up. It appeared like around here. I'm surprised it didn't stay. It has to lock in. Like the previous one we had over here locked in like 7 or 8 of them, which showed the exhaustion here. Yeah, so we had like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 lock in on 5-minute time frames, which then locked in on the hourly, and then that showed the idea of the breakdown, while other people on other channels were doing something like this. We were not fooled at all. Minutes here. Are we going into this pool down here? Are we going back to get this 2635 guy at $122 million? And the 65 down here, we're just a hop, skip, and a jump from getting him. I would say it's a definite possibility that that guy's going to be knocked out. They opened their trade long up here at 2675, so they're currently negative and hoping for a prayer. They should have got out when they got to break even up. It's just coming back to finish him off. They gave him a chance, but you only get one. Off with his head. I'm up 80% shorting that nuke. Awesome, man. That's the way to do it. That's the way. The way, the truth, and the light. We'll have some Stream Deck working out later, but so you get the 5 and the 15 starting to see some sort of reset here. You're getting the Williams down in your favor. The MACD's coming up to say hello to the Williams. When you get these together, then it's good. What is this MACD? It's a normalized MACD set in the framework of negative 100 to 100, so it chills out between these two domains. And if they go all the way down to the bottom with the Williams, you generally have some sort of massive ideas playing out. So you got the head, the shoulder, head, and the shoulder idea. If you can reclaim these baselines, you can start to see some sort of scooping out of this. But as it stands right now, we're seeing it potentially continue. I still am of the mindset that the 27.3 region is not necessarily out of the question, although you're seeing that dollar play first. So you're getting the dollar to play out, which will cause everything to kind of stall out a bit. So this is how you watch things cascade. So if you were entering on that 15-minute nuke idea, you'd see the crossover event, and you take the crossover and follow it along its journey, and hopefully it starts to cascade and gently push the price down in as the leading moving averages do, and you start to see that it's basically good to go in that time frame, and then you move your stop loss into profit as you go. So if it kicks you out, it rewards you for your time and effort and risk that you put into it. Two minutes for the candle. Pre-Hob. So they just recovered basically this entire hourly candle. The fair value gap, how much of that was, I mean, it was basically recovered by this one anyway, so it's doing the double bottom idea if it's going to continue. Once again, before you short anything, it generally does like a double top scenario before it goes down anyway, so you'd expect a second or a third hit to the high before it goes. If you don't do that, then you set yourself up for getting rocked, although this one did play out fairly nicely. You did have, 1 and 2, and then technically that one was your third hit that was within a short time frame, but you have 1 and 2. Where's your third hit gonna be? The reason why it does 2 or 3 hits is that the people that entered first get scared out or stopped out, and the second people also get stopped and scared out, and it induces the most amount of longs to pave the downside. So it's the power of threes. You can YouTube that concept and look it up for yourself. It's not my own idea. There's a bunch of ideas out there like that. The power of threes. So check it out. So 1 minute to candle close. Let's see how the hourly closes, and we will say adieu to you and yours. 6 seconds. The outskirts of the Keltner channel. So it's trying to avoid that crossover event on the hourly here. If you see the hourly crossover here and lock in as a crossover event, you know what that means. It means it cascades, ladies and gentlemen, just like it did here. So if it crosses over and locks in and doesn't get disrupted or avoided here, then basically it could cascade to the higher time frames to the downside. And so that's what you'd be looking for. Here's where you would find a nice scalp long, perhaps, if you were so inclined. Ultra risky. Nothing I say should be taken as financial advice. Entertainment purposes only. Paper trade and all that biz. But yeah, you got this, at least, you know, coming up to this region, perhaps the bearish retest of the head and shoulders. The third hit to the high. 1, 2, 3. Where is it going to be? We're at the bottom of the Keltner channel, double bottom idea. Let's check we're seeing the curvature of that. MACD on this thing all the time that is above me. It's above my pay grade. So you're seeing a lower low on the price action, but a higher low on the Williams. So you could be seeing this play out to the upside. 5-minute bullish divergence on the Williams. I don't have a formula on that yet because I didn't even know about it until recently. So you could be seeing that play out as well here. And the MACD crossing. You're getting the crossover event on the 5-minute. If it locks in a 5-minute cross, then you can expect more upside from that point. Just as you see a cross here and it eventually came down, you don't fight the crosses, folks. They're leading moving averages for a reason. They're not lead price action into an idea before it even knows it wants to go there, just like here. And then here. Just let the 5-minute play out. And you're getting that higher time frame support with the finger, giving you that upside potential of a continuation idea. And with that in mind, I'll leave it where I kept it at the beginning up to here at 27.3 and seeing where that takes us. You know, if you had gotten in there, that could be like another smooth 3.55%. We'll see how it plays out, shall we? And I thank you for your time. And once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part and coming on in, and I will catch you on the flip side. Peace.